For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video on process Asian session. A couple traders asked about the oil trade. They asked about gold. I took a trade on oil beginning of the day. And just coming back to what we talk about high and low of the day. And I talked about understanding levels with oil. Again, we had a broken down market from the high of the day in London on Friday. This market is a broken down market. We had the continuation trade in the U.S. session and peak formations into the close of the weekend. Peak formation high, breaking down into the new day. So when we zoom into our smaller time frame, again, all I'm looking for are levels and the thesis. The thesis is that the trade will continue down towards the low of Friday. And the initial premise is that in that first hour, we'll zoom in here, we had peak formations above double zeros heading into the close in a broken down market. That market proceeded to trade below 50. First hour again goes up and puts a high in place. Now, again, I'm not looking for that to be my trade. I'm looking for the first hour to confirm my thesis. I want to go 3 pushes into the high of the day. So once we have that first high, that is again coming back to levels, first hour. Now with oil, you'll notice if you trade oil in Asia, that second hour tends to be the explosive hour with oil, whether that's, I know traders talk about Tokyo Open and 7 o'clock, New York, 8 o'clock, all those things. With oil, the middle hour tends to be where the explosive move takes place. Exactly what I talked about. New hour starts, they pop the top. That new hour triggers breakout traders. Now remember, the thesis is a broken down market. We're already trending down. So I'm looking for something up high for the move back down. This last 15 minutes of the hour, this ramping price action. Remember, this ramping price action. Look where they're trading in the upper portion of the box. 1 push, 2 pushes, trapped volume up high, pin hammer. There's our trade. As soon as they come down below these candles in that last 30 seconds, I'm in the market. It's a 1-bar stop targeting down not only to the low of Friday, but to break through for that 50 pip range expansion. Now, there was a possibility this market could have proceeded to go through, but again, I kept my target in place. We had 3 pushes down, took me out. The trade is over. The yen pairs were great setups as well. I chose oil. Again, I just typically will look for one good trade. Doesn't mean that one's better than the others. Obviously, with oil, I find that the range will be a bit bigger. And pound yen, euro yen, yen crosses. We have broken down market. I talk about break on Friday, the break of the high. We know there's money in the market at that low when they break the high. They break down, they pull back in the gap and trade lower and go into consolidation underneath the low of the day. That's a broken down market. Peak formation high in London. So again, come back to Friday, day 1, day 2, day 3. We're trading back down out of the consolidation inside of the peak formation. Don't counter trend the peak formation, consolidation, double zeros for the move down. Now traders will say, well, what about the 12 candle window? Well, often you'll have an opportunity in Asia, sometimes in these Asian pairs. Sometimes you'll see a move at 7 o'clock New York. Other times you may see it at 8 o'clock New York. You may see it at 9 o'clock New York. So if you're coming to this screen later, they still gave you the opportunity to sell this market down. Now again, the further you are away from that move, the closer potentially you get to the end of that move. And so you have to ask yourself the question, are they getting me to sell down low? And if that's the case, possibly this market may be set up for a reversal today, back towards the high of the day. We've got sellers, shorts in the market below 75 and selling down low. Now, I don't know. This market could continue to trade back towards the low of last week. Again, euro yen, exact same setup, just a different variation. High of a day on Friday into the US window, broken down market, taking out the low of the day in London, consolidation, and then 1, 2, 3 to double zeros into peak formation for the 50 pip move down. So the market's already broken down. There's no, traders have asked, well, what's your process? What's your process? It's high of the day, low of the day. And if you're inside, we're either in a low-hanging fruit continuation trade or there's nothing. It's as simple as that. So don't make it too complicated. This was just a continuation move. We want to see the pop up into the double zeros. Again, if you come to the screen later in the 12 candle window, they gave you an opportunity to again sell the pop up. So there's your anchor point. They go vertical into the quarter level. In a broken down market, we want to sell above the numbers. So again, a question last day, do you focus on the numbers? That's all I'm focused on. That's all I'm focused on is the numbers. Once I have my thesis broken down market, I want to sell above the numbers after they lock it in. We get a peak formation bull candle, they engulf that. I'm getting filled above the numbers, whether it's the first 15 minutes, the second pop up, whatever that may be. We're already in a broken down market. They go vertical for the pump and dump in that first 5 minutes. Often I will let the 15-minute candle close out. So the second 15-minute bar comes up, because again, you've heard me say this repeatedly, first 15 minutes, false move. And what that is the counter trend into the broken down market. So we're just trading back in line with the original trend, back through to major round numbers, 50 in this case. If you were selling it up above double zeros or inside of that broken double zero area, possibly 40 to 50 pip move back down towards the low of the session. So coming back just to some simple concepts, the low of Wednesday, which essentially is at 50 because they put a peak formation in on Thursday down into 50. This area, anywhere where this low is, anywhere in this area, that trade has the potential obviously to fail or not follow through. But also remember, the trader who's long from Thursday night, not only do they want to maybe stop him out, but they want to put some heat into him. And the low of that bar, as you'll see, becomes the area where the pin is pushed through. This market could still continue right through to the low, no idea. But again, just an existing broken down market, pop up into the trend for the continuation down, major round numbers. Traders who traded the yen pairs, obviously 40 to 50 pip opportunity. Gold, just coming back to, again, we had peak formation on the open of the session. We'll just reset this. Peak formation, beginning of the session on Friday night, inside of the previous day's high. So you've heard me say when they don't take out the high and they're consolidating underneath, they're obviously probably going to explode through that area. We had peak formation on Wednesday. The breakout, so when they break that high, not only do they break the initial high of the day from the open of the 12 candle window from the US session, but they also trigger Thursday's high. So coming into today, we know that breakout traders are already in the market. So for traders who are holding on for a break of Friday's high, we already have breakout traders in the market. As soon as they broke that high, we have money down here. We have money underneath that peak formation low at double zeros. Now look at Friday night. We have pin hammer at the quarter level, a second pin hammer, and a third pin hammer at 50. They've come up with 3 pushes into the high of the day, broken down and gone vertical right at the close of the first hour. Now I love this because what they've done is they've creeping trend down, they pop it up and pull it back down. So this market is down low until the very last 15 minutes and they go vertical. They go vertical in the last 15 minutes and close that hour up top. That closes as a bull candle on the hourly chart. This is where the trade thesis begins for me. If I was trading gold, I did not trade gold as I was looking at oil, but that little vertical pattern is the beginning of the pump and dump at the end of the hour. First thing they do at the beginning of the new hour is pin the high. Now, I know traders who already were looking to short this market when the new hour began. They engulf the high, they pin it, they pop the top, trigger breakouts in the new hour. So traders were in on the close. Other traders were in on the large engulfment. And as I said to them, once they go up vertical and come down, all I would focus on myself is getting filled above double zeros. So again, coming back to numbers, I'm just forgetting about chasing candles. Once the thesis is there, if I was shorting this, I want to get in above the numbers. And again, coming back to our 15-minute chart, who's in the money? So we have traders who went long on the continuation, just above 50. So pay attention to what's happened here. When they've bought this candle, they've made them buy the lift. They're lifting the offer. So they're buying high, which means that this low, if they come through, look at the space. Look at the space back down to the traders who are long at 1730 candle on my chart time. At the New York, after the equity markets stop hunt down in, they continue to move up. There's a gap. They lift the offer. So traders who haven't locked in the money are now trapped. The first thing they do, though, is they go down and tap that trader out at break even and this bull candle. So we'll zoom in here. This is obviously on a smaller time frame, but they tap this trader out and they go right back up into the engulfment candle of traders who are trading on the longer time frame. So again, coming back to traders who look at 30 minutes and a 1 hour and a 15 minute and a 5 minute, they want to line them all up. It's about the levels. So when you're chasing price, so you're in the right direction, but they come back and get the 15-minute trader before they come down and potentially not only stop out the longs off of 50, but go right back down into the longs off the low of the session. So broken down market just was an easy scalp for oil, continuing to the low of in that downtrend, had the potential maybe to go further. But again, as a trader asked, is this a 1 star or A plus, B plus, that type of trade? 1 star, 3 star, 5 star to me is size of exposure. So a scalp is 1 star in the sense that, I'm looking at 25% max size. So think of the mnemonic. I've heard traders say this over and over again. Scalp, size the best and scalp the rest. So 25% max size. If it's a 5 star and it's a high of the day, low of the day, high of the week, low of the week opportunity, 3 sessions of rise, whatever that may be, and it's 5 star, that means I'm going to go full size. If it's a 3 star, that means I'm potentially going to be looking at adding positions in. So again, could be high of the day, low of the day, like on we saw in the Asian pairs or on gold on Friday. But great question. So again, on the session scalp, I'm just merely looking to take a trade. It's easy money, should be low stress. It should behave accordingly and be over very quickly. And that's it. So keep it simple, traders. Have a great day and a great session today. Focus on the process, and may the markets go with you.